Welcome back to the Property Finance Podcast, and today I'm going to talk about probably the most asked question that we get, whether it be networking events, whether it be trade events, whether it be just in general, just people ringing up and asking questions, but it's how do you get finance as a first-timer? So that covers lots of different things. You might be a first-time investor, you might be a first-time developer. It completely depends on what your strategy is moving forward, but what I want to talk about is actually some of the solutions that we've put in place recently for people. And we deal with first-time developers and first-time investors pretty much every case now, I would say. So out of all of the cases that we deal with, I would say minimum 70, 80% of them are first-time investors and first-time developers. And we're very lucky that we've also dealt with people who have come to us as first-time developers and actually gone through to their 7th, 8th development. We've actually just had one where we financed their 8th project. So for us, I mean, that's ideal. And it creates a lovely ecosystem where we help people as first-time developers and they just keep coming back to us, which is really nice. So my first tip when it comes to first-time investing is make sure that your credit file is pretty tidy, because when it comes to first-time investors, we're talking about buy-to-lets, commercial mortgages, maybe bridges over small flips, that kind of thing. So your credit file comes into it a little bit more than it would with development finance, for example. So make sure that your credit file's clean, make sure that your bank statements are clear, make sure there's no gambling or that kind of thing on there. And just make sure in general that all your payments are up to date, that you haven't got huge credit card bills, that you haven't got loads of missed payments, that sort of thing. As long as that's there, most people can get a buy-to-let mortgage, a commercial mortgage, or maybe a bridge over a small flip for their first time one with minimal difficulty. So you shouldn't need to bring on any partners. You shouldn't need to bring on any guarantors or anything like that. You should be able to do it by yourself. And as long as your credit file's clean and the project stacks up, that should be relatively simple. So dealing with first-time investors, actually, from our perspective, is probably one of the easiest things, because actually it's no different to dealing with someone who's been in it for 5-10 years. The only difference is that actually you're dealing with maybe slightly higher interest rates than you would if you were more experienced. Where we get maybe a little bit more complication is first-time developers. So development is seen as, obviously for numerous reasons, higher risk than buy-to-lets, commercial mortgages, that sort of thing. And what I would say in terms of how you want to structure yourself, you want to make sure that you've got a good contractor, you want to make sure you've got a good project manager, you want to make sure that you've got basically that team around you to support you. The contractor is probably the most important person, because at the end of the day, you're not going to be on site knocking the walls down or building walls up, depending on what you're doing. So they fall back onto the contractor as kind of their first port of call, the lender, that is. So they'll fall back onto the contractor, they'll check the contractor, they'll make sure that their experience fits, they'll make sure that their cash flow is good, they'll make sure that on Companies House there's nothing untoward showing up. And obviously a lot of us know that Companies House is minimum 18 months out of date. So obviously when you're choosing a contractor, make sure that Companies House looks good, make sure that they're not showing a bad balance sheet, for example, because lenders will get nervous at that. They'll look and say, well, actually, this is your first project. How is that contractor going to back you up? How are they going to be able to cash flow through the development if they've got no cash themselves? So make sure on Companies House they look good on paper. And once you've got your contractor, your project manager sorted out, it may even be worth bringing a QS on board, because if it's your first project, not only do you want to convince the lender to lend, but you actually want to cover yourself as well, because there's nothing worse as a first-time developer than going through your build costs. You've come off the back of a course, you've come off the back of a 2-day training program or whatever it may be. You've been told to budget everything at £120 a square foot or £150 a square foot or £200 a square foot, depending on where you go for your training. What you don't want to do is then go and look at deals and be pricing things too high or even pricing things too low. So getting a QS who you can talk to and basically bounce some numbers off, or a good contractor or something like that, where what you want to do is on every project, pick the phone up and say, right, I've got this, it's 20,000 square foot of commercial or whatever, I want to turn it into flats, this is what I want to do. They should be able to come back to you relatively swiftly with some sort of build cost. And off the back of that, that's where you can then look at it and go, right, okay, I'm confident in these build costs to a degree that we can deliver for this. Because, like I was saying, there's nothing worse as a first-time developer than getting in and the build cost being completely different when you first look at something to when you go and speak to the lender. And it doesn't fill the lender with a huge amount of confidence if your build costs are constantly changing throughout a project. So they're the first things, is sort your team out, obviously contractor, project manager, QS. And the other thing you want to do is get a good solicitor on board. You want to make sure that you've got someone who understands what it is you're trying to achieve. I've spoken previously on the podcast about getting a good solicitor in place and the reasons why you want a good solicitor in place. So make sure you've got someone who isn't going to be too expensive as well, because there's nothing worse than spending huge amounts of money on a solicitor who isn't very good. We've just had a case recently where the solicitor was okay, but charged, I think, in excess of 30 grand on a development deal. And you just think, that's an insane amount of money. This was their first development deal. It dragged on for a little bit of time, but £30,000 is just an insane amount of money. So I'd make sure you get a good solicitor on board. You need that. Once you've got that team in place, it's then all about approaching the lenders in the right way. It's about giving them the confidence that you can deliver this, that you know what you're talking about, that you know the team around you can deliver it. And that's where you kind of start to work with your broker. You put the packs together. You start to go to the lenders and say, right, look, this is the project. Project stacks up really well. There's good profitability. It's just a really, really nice area. Sales are going to be pretty decent, et cetera, et cetera. That pack then goes over to the lenders. They look through it and go, right, okay, yeah, actually, we can see that this project looks all right. It's all about taking that risk away. So if the saleability is going to be good, that's a risk away. If the build can be managed by a good contractor, that's another risk away. If you're putting your own cash in rather than an investor's cash, that's another risk away. The more risks you can bring away, the easier it is to get the finance. In terms of lender availability for first-time developers, I would say at the moment, and at the point of recording this, we're coming into general election shortly, and there's all sorts of different things changing in the economy. We're still at a 5.25% base rate at the time of recording. Hopefully by the time you're listening to this, it'll have come down a little bit. But at the moment, there are more development lenders available for first-time developers than there have ever been. So in terms of, you're not putting something together for one or two lenders. It's now more an availability of 20 or 30 lenders. There really are more and more lenders coming out. So from that perspective, that should give you some confidence that as a first-time developer or a first-time investor, that there is finance available out there. But it's all about creating that ecosystem around you that is going to make you investable at the end of the day. That is what lenders are looking for. They are looking for someone to invest in. And if you can create that, finance will come relatively easily. And in terms of sort of putting your own cash in or investor money is okay on a first-time developer's deal. But I would just make sure that when you're doing it, you're not giving stupidly high interest rates, or if you're giving a second charge, that you're declaring it up front and everything else. So investors are allowed within a first-time developer scheme as well. We get pretty much every deal at the minute. As you can imagine, people don't want to put any money into the deal, so they tend to use equity investors to plug that gap. But hopefully that's given you some confidence that you can go out there and raise finance as a first-time developer and a first-time investor. And yeah, thank you very much for listening, and I'll catch you on the next one.